FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is May Day, May 1st, 2017. Well, you've been watching the oil market basically go down and then bounce back a little bit and go down again. And where is it all heading? That's the question. And can you make money on it? An even better question, which is why Josh Martinez is with us. He's president of Market Traders Institute, MTI. You can find Josh and his team at markettraders.com. Josh, welcome to the show.
Oh, thank you so much. I'm very excited to be on.
Hey, so talking about oil, and basically it's been quite a ride for the past couple of years. I don't think anybody saw the decline that was coming, or at least most people did not. So
right.
What's going on with oil now?
Absolutely. So, well, if you look at it as a technical standpoint right now, I'm looking at U.S. oil on a daily time frame. So anyone who actively invests into the market, they're going to know what I'm talking about. But there's areas of U-turns where markets naturally form low prices and high prices. So technically speaking, U.S. oil on a daily time frame is right on a support level, which is going to justify a nice low buy. Now, there's a area where the market's been gravitating towards for most of this year, well, really since December, which is at $55. And so right now we're at like $48, $49. And so ideally, looking for a buying opportunity for the next $6 move is going to be relatively straightforward. Now, if you are a Forex investor or foreign exchange, you're going to use this information and you're going to be trading Canadian dollars because Canada is a huge exporter for oil. So we're going to be looking to buy Canadian dollars. So realistically means that we're going to be selling the Great British Pound against the Canadian dollar, selling the Euro against the Canadian dollar, selling the U.S. dollar against the Canadian dollar, buying the Canadian dollar against the JPY. This one realistically is a very straightforward trading opportunity. Now, let's look at the fundamental side, why this is happening. Well, it was back in 2016, February 2016, last year, where it was like oil was like $26, and there was talk about you could buy a bucket of chicken was more important or more expensive than a barrel of oil, which is actually pretty funny. But there's this organization that's called OPEC. It's called Organization of Petroleum Exporting Countries. And basically what they end up doing is they kind of turned on the faucet and they flooded the markets. And they're made up about just a handful of countries, not too much. And they hold like 80% of the oil reserves. So they flooded the market and they flooded the competition. They drove the prices down. This caused a tremendous amount of individuals to kind of shut down or stop producing. Now, what's interesting about this is OPEC, which people thought OPEC was kind of dying a little bit, but the end of last year, around December area, OPEC limited their production. So it's kind of interesting because they ended up flooding the markets, drove competition out of business, or caused them to lose a lot of money. And then they said, okay, let's go ahead and limit production to stabilize oil prices. Let's bring oil prices back up. What's neat about this is there's been about 100% compliance across the board, and many countries are on board with this or in favor of it. Like, for example, Russia. Even though Russia is not a part of OPEC, Russia is a huge exporter of oil and natural gases as well. So their country's currency hurts real bad when the prices are too low. And so they're on board with the limiting production as well. Canada is in favor of it, even though Canada is not in part of OPEC either. So it's been very interesting. So all this comes down to the technicals and the fundamentals are lining up perfectly, because this month in May, it's been rumored that OPEC is going to have another discussion or another meeting to basically say, hey, let's extend the limits let's extend this limited production, which naturally will begin to drive oil prices back up. So what's neat about this is oil is at a low price off the daily time frame. Fundamental state that the market is supposed to increase to around like $55 mark, even upwards of $60 mark of resistance, and then technicals are matching up perfect. So anyone who's trading oil is great low time to buy for sure. Anyone who's trading currencies, start buying up Canadian dollars as well.
So right now, the Canadian dollar is around 73 cents and change vis-a-vis the U.S. dollar. So it's really getting close to a low there, if not at its low. So you see the Canadian dollar, by virtue of this trade, going higher.
Yeah, for sure. Because, when you look at, if you look at the U.S. dollar against the Canadian dollar, so right now, for every $1 US and 36 pennies is equal to $1 Canadian dollar. And what's neat about this is we're at a relatively high price. I'm actually looking at it right now. We're at the highest price that we've been since February 28th, 2016 area. And markets naturally move in waves. And so time frame, we've actually been pushing bullish. The U.S. dollar has been gaining strength against the Canadian dollar since April 12th. So it's been pushing bullish quite a bit, almost in a straight line, which is very, very rare of the market to do. So it's topping out for a natural wave or natural pullback. So absolutely, we see this being Canadian dollar strength, which is a good time to begin to buy. As a matter of fact, I'm already selling personally the euro against the Canadian dollar, and I'm selling the Great British pound against the Canadian dollar right now in anticipation of Canadian strength.
Interesting. And so how do you protect yourself in the event that you're wrong?
Well, great question. So, success is a formula, not a fantasy. And so one of the neat things about being an investor is you're going to have that proper formula. And it really starts with equity management. The old saying of, risk $1 makes $3, risk $1 makes $5. And so, you should never be in a position with an investment opportunity. It doesn't matter if you're trading oil, trading stocks, trading currencies, or whatever. You should never be in a make or break situation. The reality of trading or investing in general is your return on your investment should come from placing 50 to 100 trades. And that's where you should see your true formula shine. And so, if we lose and if we're wrong, then we lose. But we're not going to wipe out our entire nest egg, if that makes sense.
Yeah, so you're always limiting your risk on the downside and letting it run on the upside. So when you say that success is a formula, not a fantasy, how has that worked in your life? How does that apply to your success?
Oh, absolutely. So I've been a Forex investor. April was my 8th year anniversary here at Market Traders Institute. And I have about 16,000 hours of application, mentoring, and trading time. I teach literally 30,000+ individuals on a monthly basis and reach out to over 100,000+ individuals on a monthly basis. My personal track record, I don't know if you're listening to this and you invest into the foreign exchange, since February 2016, I haven't had a losing month. Matter of fact, this is my 15th month of consecutive gains. And this is all backed and tracked by myfxbook.com, which is a third-party verification process. Since February 13th, 2017, I haven't had a losing trading day, so my net day. So I haven't had a net losing day since February 13th. That's all. February, April, I'm on my third month going with no losses of a net losing day. Now, collectively, since February 2016 to 15 months, I've made over 42,000 pips net, and I'm winning 76% of all my investments. And so if you don't know what a pip is, it's actually really neat within the foreign exchange. So make it simple. If you have $1 in your pocket and you were to break it, $1 would equal to 100 pennies. 100 pennies equal to $1 US. If you had a penny in your pocket and you were to break it the same way, you would have 100 pips. So what we're doing within the Forex market is we are literally monitoring fractions of pennies worth of movement. And so what does that truly mean? Well, if you were to press the buy button, and there's what's called a mini lot, which is a $200 investment per trade. Most people can invest about $200 per trade. So you press the buy button with an average investment of $200. 1 pip is equal to $1 US. So when we say, hey, we made 42,000 pips, that's making a 42,000 US dollar return. Now, at a standard lot, which is a little bit heavier of a lot size investment, that's a $2,000 investment per trade on average, which means every pip is equal to $10. So when we say, hey, we made 42,000 pips in the last 15 months, it's a 420,000 US dollar return. Now let's tie this all together with oil and the Canadian opportunity. So the US oil I'm looking at right now, it's sitting on support. You have the OPEC meeting that's about to take place relatively soon, is rumored to take place this month, about continuing the limited productions, which naturally, fundamentally drive oil prices back up. Technically speaking, oil is at a support level of an up channel. So those of you who invest, look at the daily time frame, you'll see it. We're at around $48, $49, should press up to around $55 and maybe $60, but $55 for sure, percentage speaking. Now, if you take that information, carry it over to the Forex world, okay, and you were to sell the euro against the Canadian dollar right now, because we're expecting Canada to gain strength based upon oil going up, because Canada is a big exporter. So, Canada is oil, oil is Canada, type of scenario. So the euro should fall against the Canadian dollar for about 300 pips, which really means if you were investing $2,000 per trade, that's a $3,000 US dollar opportunity. That's going to take 1 to 2 weeks. The Great British Pound against the Canadian dollar shows a selling opportunity in regards to pip-wise for about 530 pips. Now, this one's going to take a little bit longer to fall, about 2 to 3 weeks, but that's over a 5,000 US dollar return at a standard lot investment. And so those are just named to a couple currency pairs, but this is a really fantastic time to begin to invest into the markets, especially with everything that's just happened with Brexit and with the current growth with China, where China's right around a 7% GDP or just under 7% GDP. And the fact that China is continuously to grow and the United States is growing and the world's growing, demand on oil is increasing, and which is really helping us dictate whether we should be buying or selling Canadian dollars inside the Forex world.
Interesting. Very interesting. So how did you identify this opportunity exactly?
So when you say identify the opportunity, are you referring to becoming an investor, or are you referring to the trading opportunity?
This particular trade.
Yes.
How did you, what was the thinking behind it? How did you uncover it, I guess is what I'm asking.
So when everyone's approach is a little bit different, but what's most important is when you sit down in front of your computer, most people trade through their computers now because of technology. You need to know exactly what you're going to do from start to finish. And you can't just be guessing. You can't just be looking. And you have to understand the whys or the purpose behind every action you do. And so what does that truly mean? Well, you need to have a time frame that's going to give you the direction of a push. And then you need to have a time frame that's going to give you the opportunities for an entry to conserve your risks. So this way you're not losing all your money off one trade. So typically, for me, what I do is I start out with the monthly time frame, and I use the monthly time frame for direction. The reason why is when you look at the monthly time frame, which means every candlestick or every bar, which represents price movement, represents an entire month. If you can find what the market's going to do technically, either push bullish or bearish or up or down for a month or 2 months or 3 months, it gives you the competitive edge of what's called forgiveness. So for example purposes, we're expecting US dollar to go up. Not US dollar. You are expecting US oil to go up. And so what do? So direction says up. I go to the daily time frame, and every time I see a low price or a dip, I want to begin to buy because I have the understanding that direction is up. So therefore, I want to buy the market when it's at a low price, especially when it's exhausted. Whenever you have direction being up and you see that the market has exhausted itself bearish or push going down, those are great little buying opportunities based upon U-turns. The reason why we do this is we call it stacking all the odds in your favor. Now, you have to make sure that you understand what an exhausted market is. It's the old concept of buying low, selling high. But it only works if you understand direction. Now, a little bit of a hint, okay? Trader's tip. If you ever see the market push 7 or 11 candlesticks, typically it's exhausted. Usually the market's going to wave, making higher highs and higher lows, or lower lows and lower highs. Any single chart that you look at is represented by that. So in this scenario, when I'm looking at U.S. oil right now, the market's been pushing bearish for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We're on our 14th day, so this market is completely exhausted. Now, so we got ourselves in an exhausted bear move. Direction is up. Fundamentals support the upward movement, which means this is a really great time to begin to buy the market. Then you're going to use your favorite entry strategy, which I like to go to like a 1-hour time frame, and that's where we have the good equity management trades, where we risk small and then we go after the bigger move. I know that may sound relatively complicated, especially if you don't know what you're doing within the Forex market or within the markets in general, but at the end of the day, keep it simple. It really works like this. Money is made by buying low and selling high. Whether you're buying oil, buying currencies, or even buying ice cream. Buy your ice cream for 10 cents, go sell it for $1. Just learn the skill of finding an exhausted market, whether the market pushes down or pushes up, and then strategically enter into the market. Now, when you have fundamentals that match up with the technicals like we do now, these are your extreme high winning percent trading opportunities.
Interesting. So you pretty much simplify this. You think the average person is capable of being a successful, effective trader, Josh?
Yeah, I agree with that. I think at the end of the day, in my personal belief, and this is, doing this for 8 years now professionally, over 16,000 hours, and, training tens of thousands of people and having great success of mentoring investors and having them tell me that they're accomplishing all their goals. It's my personal belief that anyone in this world can trade. But trading may not be for everyone, right? Everyone can trade, but trading may not be for everyone. Why do I say that? It's more of an emotional game than anything else because you're dealing with money. Oftentimes what I see is if an investor or a person in general comes in with the mindset of, I'm going to follow the rules, I'm going to use what other successful traders use, I'm not here to reinvent the wheel, I'm looking for consistent, reliable income, I'm not looking for lotto hits, I'm not looking for home runs every single trade, or this is not gambling. If a person with a correct mindset comes in, they're usually very, very successful. The people who really struggle the most with investments that I've seen based upon my experience, it's your highly successful entrepreneurs, your doctors, your lawyers, your attorneys, your C-level individuals who are used to being right and telling everybody what to do. The people who really make it big that I've seen that really hit and just generate massive success, they're your blue-collar workers. They're your teachers, your firefighters, construction workers, people in the military all the time. They come in and they're rock stars. And the reason why is they're so used to just following directions and just doing what they're told that when you do what you're told inside the investment world and you just follow the rules, you have great success. When you try to come in here and just figure it out on your own and try to reinvent the wheel and try to go for gambling and home runs, you usually get crushed. And so it's my belief if you have the right mindset, you can absolutely do this.
Interesting. And it's interesting that the people who are more, I guess, free thinkers, entrepreneurial, self-employed, they're the ones that have the biggest problem.
Yeah, just because they're not used to being wrong, right? And they're not used to, I don't want to say following the rules, but I'm saying they're just not used to understanding that you're not going to win 100% of your trades. As an investor in general, your job is to look at an opportunity and just say the following. If I were to see this opportunity 100 times, what would the market do most? Would it go up more times or would it go down more times? And am I trading in that direction? And that's really all you can do as an investor. And so the old saying is, if you trade in the direction of the higher winning percent move, then in return, you should receive higher winning percent trades. That's why I say success is formula, not a fantasy. And you really need to place 50 to 100 trades to really see your formula. And what happens is someone who's super successful, A-type personality, is used to winning all the time, when they lose for doing everything right, they think they did something wrong. And the reality of it is, it's just, hey, the losing percent's one. That's okay. That's just one trade. It's not going to kill you. Keep following your formula, keep following your rules. It's going to work itself out. And your blue collar individual says, no problem. I'll just keep doing what I'm doing. And it works for them. Where the overthinker, the highly successful individual says, what do I need to change next time? What do I need to do different? And oftentimes the answer is do nothing different. And usually that's not an acceptable answer for someone who's highly successful.
Yeah. And so it all comes down to temperament then too, right? Do you have
Absolutely.
the temperament to be a trader? I personally don't. I'm one of those other people you were talking about who's had issues with all this, right?
Right, absolutely. Well, it's funny you bring it up because as I'm talking about this out loud, I'm thinking to myself, what was I doing before I became a trader? Well, I used to be a personal trainer, and I actually went to school to become a firefighter and an EMT. I graduated as a nationally certified EMT, emergency medical technician basic, and I got my professional firefighters certificate 1 and 2, and then I became a personal trainer. And so for me, it was an easier transition to become a Forex investor. I'm not saying that I was a rock star starting out. No, first the disaster, then the master. But at the end of the day, just any other successful individual, as long as you don't give up, as long as you move in the right direction, it's just, even if it's slow, you're still getting there.
Yeah, absolutely. I totally know what you're talking about. And you need to learn from those mistakes that you make there, right? You really need to understand why you went wrong in the first place in order to not repeat it.
Correct.
Yeah. So, wait, just while we're talking, what was the best payoff you ever had? Best trade you ever made?
Absolutely. So the best trade that I ever made was from the Great British Pounds. And it was right before, I believe it was the pound New Zealand dollar. I'm a Forex investor, so I predominantly invest into the foreign exchange. And what I did is I identified the market being at a high price. And I use Fibonacci's for technicals. And I saw that the market has fulfilled a de-extension. So I entered in the market selling with 10 standard lots, which is an average investment of $20,000, which means every pip was $100. And then I saw the market do a double top. So I entered in with another 10 standard lots, and this was a handful of years ago. So I was 20 standard lots in, so every pip was worth $200. And then all of a sudden, and I was selling the market, all of a sudden the market slammed down, and within like 15 minutes, I was up over $10,000, and so I just said, I was lot heavy. I was trading more than I wanted to at the time because 5 years ago I wasn't as conservative as I am now. But 5 years ago, I was up $10,000 in less than 30 minutes. So I said, hey, I'm just going to take my profits, and that was a very exhilarating experience for me. But it's something in which I do not ever want to repeat. because emotionally, it was so stressful. I think my biggest accomplishment as an investor is what I'm currently doing now. What I'm currently doing now is I'm just going after a simple 3 to 5% compounding gain a month. I'm 15 months of consecutive gains. My drawdown for this year thus far is less than 5%, which is fantastic. And it's just a slow and steady compounding growth. I think that, to me, allows an investor to truly function as an investor without taking the money away and just going after and just doing the job as a trader. Slow growth becomes big growth over time. Wow.
Well, that's really interesting. Hey, what was your biggest hit that you've taken, and why did that happen?
Oh, yeah. So the biggest hit was I lost $10,000 in a day. So the exhilaration was, hey, I made $10,000, but then I lost $10,000. And I said to myself, I don't ever want to feel this way again. But financially, that was the biggest hit. But emotionally, that wasn't the biggest hit. Emotionally, my biggest hit that I took happened 6.5 years ago. And my wife and I, like I said, I used to be a personal trainer, so I didn't make a whole lot of money. I was making like $20,000 a year, which was nothing. And I lived in like a 500 square foot apartment, and I didn't drive a vehicle. Matter of fact, I sold my vehicle because I believe in the Forex market. So I sold my vehicle to make a little bit of money. And I was using my girlfriend's car, who's now my wife, and she had like a 10, 12-year-old Honda Accord. It wouldn't even start all the way. We have to bang on the starter just to get it to turn over.
Right.
So I scraped up and sold my truck and started investing. And we started out with just $500. Like I said, we didn't have a whole lot of money. And about a year into it, I was seeing success, and I was growing the trading account. I was doing everything that a trader is supposed to do, following the rules. And I said to myself, okay, I need to make some real money. I'm just making a few $100, and I need to make some real money. I need to make a few $1,000s. That's really going to change my life. A few $100 isn't. Mm-hmm. So what I ended up doing is I over-leveraged, and within about 5 days, I lost everything that I made over the last year. Mm. And it was such a devastating blow because emotionally, when I lost that, I lost my dreams. Mm. And emotionally, I lost my hope and my goal of being a successful investor. And so I felt so bad that I just wanted to rub my body against the floor because I felt lower than dirt. And so I wanted to quit, and I'm sure many investors who trade, feel this way time to time. But if it wasn't for I even told my girlfriend, who's now my wife, and I said, I'm done. I said, honey, we've been doing this for a year and a half. I already sold my truck. I got nothing else to sell. I'm making no money. The little bit of money that we made and compounded, I just lost it all. And she encouraged me to keep going. And she said, there's a little bit of money left in the account. Keep going. Don't give up. And if you lose it, go do something else. But I've seen you be successful. Just try it out. And so I emotionally disconnected from the market because my brain, I quit. And I was just trading because, she asked me to. And that was my tipping point. That was when I said, that's when I started following the rules. I stopped caring. I didn't move my investments. I didn't double down, and then move stops, and then move limits, and then move exits. Just listen to the strategy. And I ended up taking a $500 initial deposit investment. I ended up turning into right around $39,000 of profit. And all that came from my girlfriend, who's not my wife, just telling me, just try it one more time. And then that was my brain disconnecting and just saying, I don't care anymore. So when I became indifferent from experiencing a heavy blow, I became indifferent. So I just don't care about the money anymore. That's when everything became really fantastic for me. Wow. In regards to trading.
What a great story. Well, Josh, I know people out there, you're going to want to connect with Josh. You're going to want to find out more about this opportunity. And where do we go? Who do we talk to?
Absolutely. So what you can do is you can go to our website, www.markettraders.com. That's www.markettraders.com. We do host presentations where we will give everybody the basics. We'll show you what the Forex market is, what a PIP is, different lot sizes. We'll show you trading opportunities of what we're currently looking at. We have what we call them predictions, which are just massive trading opportunities. We have what's called a pound breakout prediction right now, which is over a 5,000 pip trading move, which is like $50,000 worth of opportunity with a standard position. So again, just go to www.markettraders.com. There's information there, which you can find. And, we're here to serve. We're here to help. We know what it's like not to have, and we train investors all around the world. So it doesn't matter where you are, whether you're super experienced or brand new, we have the program for you for sure.
Wow. Really exciting, Josh. I'm really glad we had you on the show. If you had any questions for Josh or myself on this interview, any others, send us an email, kl@kerrylutz.com, kl@kerrylutz.com. The Twitter feed's @KerryLutz, and the Facebook page is Financial Survival Network. And this interview definitely falls into that category. Josh, thanks so much, and good luck.
Well, thank you so much, Kerry. I really appreciate it. Have a wonderful day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.